master budgets and performance planning. Okay. The first one, do some true-false questions. First one says, budgets are normally more effective when all levels of management are involved in the budgeting process. That's going to be true because, again, you want to make sure everyone has a voice in it. Even though they might not get heard or done what they say, you want to make sure everyone has a voice in it, from the lowest level all the way up to the highest level in the company. Next one now. Number 2 says, past performance is the best overall basis for evaluating current performance. That's the need for corrective action. It has to be false. I mean, yes, you do look at past performance, evaluate it, except I wouldn't say it's the best one or the only one. Now, number 3 says, a master budget refers to a company's sales budget includes all of its segments or departments. Has to be false. The master budget is the overall one, so it's not include all the segments or departments. Say, okay, here it is for everyone. It won't go for each individual segment in each department. Okay, the next one now. Number 4 says, a June sales forecast projects that 6,000 units are going to be sold at a price of $10.50 per unit. The desired inventory is 50% higher than the beginning inventory of 1,000 units. Total June sales are anticipated to be, well, again here, we got a lot of information there, except all we need is just one thing. Take the 6,000 units, this is our estimate, and multiply it by the $10.50 per unit. Okay, so again, when you do that, that would give you $63,000, which is answer A. So now, number 5 says, which of the following factors is least likely to be considered in preparing a sales budget? Again, remember, sales means, again, like it says there, what are you going to sell? So, yes, you got to take account how big you are at plant capacity, what's going on in the world, the economy, the industry, what happened in the past, even your selling expenses. All you really need is capital expenditures budget. And capital expenditures budget means if you make a big purchase, are you going to buy land this year? Are you going to sell it? Are you going to buy any equipment? All your property, plant? Okay. You don't really need that to do your sales budget. Which of the following is not a benefit of following a well-designed budget process? When you follow a budget, yes, it does improve your decision making and performance evaluation, and it does, coordination and your commitment. But there's no assurance of profits. There's no guarantee. Like, okay, we have a great assurance of profits. I mean, yes, you can budget for it. I won't say there's an assurance of it. Okay, next one now. Number 7 says your next year's sales forecast: 20,000 units at product A and 22,000 units of product B are going to be sold. Price of $10 to $12. The desired inventory of product A is 20% higher than the beginning inventory of 2,000 units. The beginning inventory of product B is 2,500 units. The desired inventory of product B is 3,000 units. It says here, I want to do the budget of sales. Again, we got a lot of information, but all we need is 2 things. Okay, start the first part. It's 20,000 units. Take the 20,000 units for A. Again, multiply that by the price, which is $10. Okay, and then the next one, take the 22,000 units and multiply by the $12. And again, we do that and multiply those and add together, that'd be $464,000. Which is going to be answer D. Okay, next one now. It says Langston Company is trying to decide how many units of merchandise to order each month. The company's policy have 50% of next month's sales and inventory at the end of each month. Which is sales for August, September, and October of 5,000, 6,000, and 4,000 units respectively. How many units must be purchased in September? Well, let's take a look here. Okay, so again, what we're looking for here is purchases. So again here, so the first part says here, you need 15% of next month's sales. We're looking at September. So what we want to do is take 15% and multiply that by October, which is 4,000. Okay. For the next one now, well, we know, obviously, add September, which is 6,000. Now the last part says we don't want to add actually. You actually want to subtract. It says here, remember, that 50% of next month's sales. So August took into account the 15% of 6,000 for September. So subtract 15% multiplied by the 6,000, because I was taking into account in August. So when we do this, take the 15% of 4,000 plus 6,000 units, subtract 15% of 6,000 units. That would be 5,700 units, okay, which is answer D. Okay. Next one now. Number 8. Northern Company is preparing a cash budget for June. The company has $12,000 cash at the beginning of the period of June, anticipates $30,000 cash receipts, and $34,500 in disbursements during June. Northern Company has an agreement with its bank to maintain a cash balance of $10,000. As of May 31st, the company owes $15,000 to the bank. To maintain the $10,000 required balance during the June, the company must do which one? Do they have to borrow now or repay? Let's take a look what's going to happen here. Again here. So we're going to start with the $12,000. Okay. Again, that's our beginning balance. Again, so the first part, our $12,000. Then what you want to do is add your receipts, the $30,000. That's what we anticipate. The last part we want to do is subtract our disbursements, which is $34,500. Again, here we see we're going to have a balance of $7,500. Remember, you got to have at least 10,000. So see, what we're going to have to do is we have to borrow. If you take the 10,000 minus the 7,500, okay, so we're going to have to borrow. So $2,500. Borrow. That's going to be answer B. Okay, next one now. Number 10 is here. Harold expects September sales to be 20% higher than its August sales of 150,000. Purchases were 100,000 in August and are expected to be 120,000 in September. All sales are on credit and collected as follows: 30% of the month of sales, 70% the following month. Marketplace purchases are paid as follows: 25% of the month of purchase, 75% the following month. Beginning cash balance, 7,500. Ending cash balance September would be, we'll get in here. A little first part. Calculate our September sales. And it says 20% higher than August. So we're going to take 1.2 multiplied by the 150,000. Okay, so we do that, that'll be 180,000. Okay, so again here. Now we need to calculate our cash inflows. Okay, to get our cash inflows, start with our beginning balance. Okay, which we go back up here with $7,500. Plus, you want to add your August sales. Your August sales here says 30% of the sales, 70% the following month. So you collected 70% in September, so August sales. So I'm going to take 70% and multiply by the 150,000. Okay, and then the last thing you want to add is your September sales. See is 30% multiplied by 180,000. Okay, so again, now we take that, take 7,000 plus 70% 150,000 plus 30% 180,000. That'll be 166,500. Okay. Now, the next thing we need to calculate is our cash outflows. Okay, so we did that. Now I take our cash outflows. Okay, so again, this is the first part. Start with our August purchases. And remember, take 75%. So take 75%. Multiply by $100,000. Then, now do the opposite. You want to add your September purchases. Okay, which is 25% times 120,000. Again, when we do this, this would give us the outflows of 105,000. So we see in the last part, take the difference. Take 166,500 minus 105,000. Okay. When we do that, we see here, it's going to be $61,500. That's answer D. Okay, next one now, number 11. Okay, number 11 says, Blair Craft Company manages a product requires 5 pounds of raw material for each unit produced. Next year, begin inventory of raw materials 8,000 pounds. Raw materials inventory at the end of each period should be 15% of next quarter's raw materials needed for production. Given the projected production in units below, what is the quantity of raw materials that needs to be purchased for the quarter, or for the third quarter? Okay, so again here, first thing is when we calculate is we're looking for what is the pounds of raw materials purchases for third quarter. Yeah, take a calculation. Take the 8,000. We see it right there. And multiply by the 5. Okay. Plus though, take now, well, next quarter, fourth quarter, 6,000. Okay, and again here, multiply by 5. Also multiply by 15%. Okay. And the last part of it, take into account the 8,000. Okay. And subtract the 8,000 units times 5, multiplied by the 15%. Okay, again here, we do all this and take all this into consideration for each quarter. We'll see the amount we're going to need for third quarter will be 38,500 pounds. It will be letter C. All right. And the last one here. That's company. Puts file information from its sales account, sales budget. We got sales, expected sales. Cash sales are normally 30% of total sales, and all credit sales are to be collected in the month following the date of sale. Total amount of cash expected to receive from customers in September is, again here. So we see here, remember it says, 30% total sales and all credit sales in the following month. So we see here, okay, so the first part, you want to take 30% multiplied by the 60,000 in September. And you also want to add from August, remember, collected 70% of that. So take 70% and multiply by the 55,000 from August. So when we do that, together that'll be 56,500, which is letter B. Okay. All right, class. Everyone's doing well. Okay. As always, if anyone has any questions, please let me know. Thank you.